Have you cried lately because you just blew out another account? Then stop it today. Watch the rest of this video and learn how to never overtrade again. Hey guys, how's it going? JD here. So I know you've heard about money management before, right? I know you guys are expecting me to say, hey, if you want to win, just risk 1 to 3%, if you know what you're doing. If you're brand new, risk less than 1%, right? You've heard that before. I know you have, but see, here on this channel, we talk about mastery theories, okay? We're on a master level. So I know you've already heard that before. So we're going to look at money management, which I call emotional management, in a whole different way. Okay, so hit that like button right now. Hit that subscribe if you ain't ever been to this channel. I'm about to blow your mind. All right, let's go right now. So check it out. Check it out. You've been taught to only risk 1 to 3%, or 5% if you're aggressive, really aggressive, and less than 1% if you're brand new. But there's so much more to the story than that. Okay, here's why. We're all different. I'm different than you. You're different than me. We're all unique. Nobody on this planet has your fingerprint or will ever have it again. We are all unique, different people. Okay. Your account size is probably different than mine. Mine is probably different than a whole bunch of other people's. Other people's a whole bunch of different. We all have a different account size, more than likely. Okay. And then we all are different people. And see, that all goes into your money management, and how you should manage your account. You don't manage a $10,000 account the same way you manage a $100,000 account, the same way you manage a $1,000 account. It's all different. So when it comes to money management, in my opinion, you have to figure out what works for you. Okay. Here's why. Because we all have a different risk tolerance. Okay. And again, all of our account sizes are different. So one strategy is not a one strategy fits all when it comes to money management, because it's truly emotional management. And I'm going to show you, in this discussion, I'm going to explain to you why truly it's about finding out who you are. Know thyself. Okay. When you're talking about money management and trading, you need to know yourself, because it comes down to emotions. So I'm gonna give you 2 examples. Here's the first example. Okay. Let's say, before I say that, all these examples, money management comes down to one thing. Money management comes down to conquering one demon, and it is overtrading. Okay. Money management comes down to conquering overtrading, to beating the overtrading demon. That's all money management comes down to. Let me prove it. So let's say you're very conservative. You risk less than 1%, right? Let's just say 1%, right? And let's say that with your account size, to you, 1%, it ain't nothing, right? 1% ain't nothing to you for your account size. Here's what could happen, right? You think you're being very conservative by risking 1%, but if losing 1% doesn't matter at all to you, you'll take a loss, take another trade, take a loss, take another trade, take a loss, take another trade. You look up, you're down, you've lost 6 trades. But mentally, you're saying it's only 1%. This amount is small, it don't matter. But at that point, it does. You've lost 6% of your account because you didn't value your 1%. You didn't value what 1% really meant to your account size, because the amount was so small, it made you not care, right? And then you overtraded, and guess what? 1% adds up when you're losing. Okay, that's one example. Even if you go 1% or under, if you still don't have some type of rules in place to keep you from over trading, you can blow an account out just trading 1%, right? So just because you go 1% doesn't mean you're safe if you don't conquer yourself, and if you don't value each and every trade. If you don't value that 1% of your account balance, it doesn't matter. You still can blow an account out. Okay. That's example number 1. So let's look at the other side of the coin. Let's say you said, nah, man, I ain't got time to be playing around. I'm gonna go heavy. I'm gonna go at 5%, right? So let's say you go at 5%. This is what could happen if you're not prepared to go at 5%. If you're not emotionally prepared to go at 5%, more than likely, the fear demon is gonna show up, right? And you're gonna see entries. You're gonna see second entry loans. You're gonna see higher lows, but you're gonna be waiting for the absolute perfect. I mean, it's got to be a perfect setup. It's got to be a perfect off the EMA. It's got to have a perfect signal candle, which is good to do. But what I've noticed is that when you're too heavy, you will skip good entries because fear is in the game now, because you know you're too heavy. And maybe you don't know you're too heavy, but if you're skipping good entries, you're too heavy. So you see a great trade, you don't take it, you see it win. Oh my goodness, if that ain't the recipe for overtrading, here it comes. Then what's gonna happen is, because you saw that perfect entry, because you saw like, oh, I could have already made 5% of my account. If I'm lying, I'm flying. I don't know why this is. You're going to take some nonsense your next trade. You just are. That's just the way it goes. Because you didn't pull the trigger when you should have, because you were too heavy, because of fear. Now, what can easily happen is you take a terrible trade and you lose. Then guess what? You probably take another trade because now you're trying to get back. And if you was at 5% and you lost twice in a row, you down 10%. You are down 10% of your account, just like that. Okay. So going too heavy is a problem also. So what am I saying? I'm saying that you have to find balance, right? You have to find balance for your personal risk tolerance level and your account size, and it's a tricky thing, but you have to find the balance, because again, if you go down so far that you don't care about losing, that's not gonna work. And then if you go too heavy to where you're too scared to pull the trigger, that ain't gonna work. So you have to master yourself. Money management comes down to emotional management, about mastering yourself to the point where you are comfortable. If you lose the trade, you ain't happy, about it, but you're comfortable. It doesn't make you run off and cry. You're comfortable with it, but you care. It ain't so small that you just don't care. You jump in again without an entry. You see what I'm saying? So you have to find that balance. And that is something that's personal, okay? That is something that's personal, because the longer you trade, the more you will realize that you are not competing against the market. You are competing against you. Successful trading is the ability to conquer self with discipline and patience. It all comes down to you. You have to know what level you are comfortable at. I'm currently very comfortable risking my $110. All right. I ain't happy when I lose, you know what I mean? But when I run off $2 or $3, $400, $500, in 20 minutes is a very comfortable day to me. I'm happy with that profit, and I'm not sweating bullets as I'm in the trades. Okay. I found that that's comfortable. A couple of weeks I had went up to 200. I wasn't comfortable. Okay, I made a lot of money in a short amount of time, but I was not comfortable. I saw real quick, like, oh no, I'm not comfortable. I took a couple entries that were shaky. They just worked out. I didn't go what I should have. It just worked out. I'm not ready yet. Let me grow this account up a little bit more. You know what I'm saying? Before I take that jump, you have to monitor yourself. Okay, you have to figure out what's going to be comfortable for you. Right. And right now for me, I know what's comfortable. I know what don't have me sweating bullets. OK, you know what I'm saying? I know what's going to make me be OK with taking the trades as they come, so that's money management, in my opinion. Somebody wanted me to do a management video. Here it is. In my opinion, you need to master yourself. You have to gauge your risk tolerance level. You have to pay attention to what your account size is, what your account size can handle. And that's going to be different for everybody. Everybody's going to have something different based on your account size, your experience level, you know. So I'll throw another tip out here. What I found for me, because remember I said at the end of the day, everybody has to overcome overtrading. It's all about overtrading. So many people would be profitable traders if they didn't overtrade. Becoming profitable is truly about your ability to manage yourself well enough that you conquer overtrading. I know many. I want y'all to put it in the comments. Tell me if I'm wrong. Ain't it? How many of you guys are winning, and then you throw it all away on one day? I know it. I know that this is the case. Overtrading is your biggest enemy. And the crazy thing about overtrading is all about you. Nobody made you overtrade. The market didn't make you overtrade. Overtrading is a self thing. Okay. Some of you are this close to becoming profitable traders, but you keep overtrading. It's not the market. It's not the setup. It's not the strategy. You have all the tools you need. You just won't stop overtrading. Can I get a witness? Somebody gonna keep it real with me on this one. Okay, somebody gonna keep it real with me on this one. So here's the thing for me. This is what I found out for myself, because I'm definitely an overtrader. So what has worked for me is, many of you have downloaded my trading plan, right? And you can get that for free. I'll put it in the description of this video also. My trading plan is designed to keep me from overtrading. Okay, because here's the thing. The market is open 24/7. Once you learn price action, you feel like you can make money any time of the day. You know, you feel like you can make money whenever you want. Problem is, that's not true. Okay. Some days just ain't your day. Okay. Some days you're not going to win. So what I found out is that to overcome that feeling of, oh, I left this one on table. Oh, I should have kept going. Oh, I could have won this one. I take 4 trades a day. 1-1, 2-1. What that means is I take 2 singles, then I double up, then I take a final trade. It works out to 5 trades a day, but really only took 4 entries. Okay. Here's why I do that. Because I need a cap on my day, right? I need a stopping point. I figured out with me, I love trading. Okay. I'll do it all day. I need something to say, the day is over, Jay. Okay. So for me, I've capped how many trades I'll take in a day. And it really helps, because here's something else. This is a serious tip for you guys who think you can just make money all day and want to trade all day. About, I would say, the 5th trade to about that 7th trade in the same day, in the same hour, in the same 2-hour span, you only got about, remember, trading is a mental game. It's about focus. You only got about, in my opinion, you only got about 4 to 5 good setups that you're going to catch, that you're going to take with focus. Once you get up to about 5 or 7 trades, you about to start taking some mess. Okay. About that 8th trade, especially if you're down, that 8th trade, you're not following your trading plan anymore. I mean, that 9th trade, you are not waiting for second entries off the EMA anymore. You know, that 10th trade, you are definitely not waiting for higher lows. Okay. The more trades you take, the lower your discipline becomes. Check your numbers. If you're journaling like you should be, go back and see how once you get past about trade 6, that discipline starts to go down. So for me, I take the best 4 setups I see, right? I take the best 4 setups I see, and I live with the results. Okay. And I cap my day so that no such thing as overtrading. Overtrading is not a possibility. Okay. Here's the other thing about taking those 4 shots. I like to think of trading in terms of becoming a good 3-point shooter. Okay. Let's take Steph Curry. Let's take Klay Thompson. Let's take LeBron even. Let's take, I'm gonna go one back, Steve Nash. All right. or Dirk Nowitzki, any of them. You leave those 5 guys open, right? You leave those 5 guys, you give them 4 open shots. Let's say they're open threes though. You give any of them 4 open 3-pointers. All of them are gonna make at least one. Can I get a witness on that? Would everybody kind of agree with that? If you leave Stephen Curry open, wide open, for 4 shots, for 4 3-pointers, he is going to make at least one. Okay. So let me tell you how I tie this into trading. Because I have price action, it puts me on another level than other traders. Because I know price action and I take high probability trades, like Steph Curry being wide open is a high probability 3-point shot. Because I take high probability trades, if I take 4-second entries, odds are in my favor. I'm gonna make at least one. Okay, I'm gonna make at least one. So what does that mean? That means that my worst day on average should be a -3 day because I took 4 shots. If I only made one, I went down 3. Okay. So my worst day, because you may lose the double up. So that's what I'm saying, -3 if the numbers don't make sense to you. Let's say you win the first one, lose the second, lose the double up, lose the last, you actually went down -3. Okay. So if I take 4-second entries, which are all high probability trades, chances are I'm gonna win at least one. Okay. So that means my worst days should be -3. Okay. My worst trading days should be -3. Now, since second entries are high probability trades, I know what to look for. I know how to take them. My overall percentage though, I should have more 3 out of 4 days. Okay, you get it? I should have more 3 out of 4 days than 1 out of 4 days because I'm a good shooter. Okay, like Steph Curry. You leave Steph Curry open for 4 open shots, he may go 3 out of 4 pretty regularly. Can I get a witness on that? Okay, so you guys see the math. This is a math game. You got to play math with this trading. Okay, so if you take 4 high probability trades, the odds are more in your favor that you're going to go 3 out of 4 than 1 out of 4, right? Now, check this out. When on a day that I hit everything just right and I'm hot, right? Now you give Stephen Curry 4 open threes on a day where he's hot, he's going to go 4-0, right? 4-0. So on a day that I'm hot and I go 4-0, but so I won the double up, that means I went 5-0, right? Those are the days that truly grow my account, right? I'm risking 110, I make $100. When I go 4-0, I made $500. Those are the days that really grow my account. So if you having those 4-0 days where you make 500, then you have the 3 out of 4 days where you making 300, you know, and then there's a way that you can just go +1. There's a way that you can go -1. Then there's a way that you can go -3. Of course, you can lose all 5 too. But if you're taking high probability price action setups, the odds are more in your favor that you're going to have +5 days, +3 days, +1 days, right? And then every now and then you're going to have that -1. And then every now and then you're going to have that -3 because you're not going to win every day. That's just trading, okay? But if you take in high probability setups like the second entry long, with my trading strategy of 1-1-2-1, the odds are more in your favor. The better you get, that you're going to have more 3 out of 4 days, you know. And then when you go 4-0, which is actually a 5-0 day, those are the days that truly build your trading account. Okay, so that's what I've come to realize, you know. So that's why I use that trading plan, because it puts the odds in my favor and it totally eliminates over trading. No such thing. If you follow the plan. So let's get into that real quick. Story time, boys and girls. You have to, no matter everything I've said today means nothing if you don't have the discipline to follow your trading plan. I can give away trading plans all day long. If you don't follow it, it's not going to help you. You can come up with trading plans all day long. If you don't follow your plan, it's not going to help you. Okay. Again, I say over trading is your number one enemy, and over trading is about the enemy in you. Nobody makes you overtrade but you. Okay. So story time. I'm gonna help somebody with this one. I had a week once. I won Monday. I won Tuesday. No. Take that back. My week started on Sunday. I won Sunday. I won Monday. I won Tuesday. I won Wednesday. I won Thursday. I stop on Friday. I'm going into Friday. I am up $1,000, right? I'm going into Friday. I'm up $1,000. Friday comes around. I trade. Hey, it doesn't work out. I go -3, right? So that means that I was up $700 on the week, right? Then I saw this perfect setup. Oh, it was so perfect. I'm out of trades. I've already taken my 4 shots, but I see this perfect setup. And I'm like, well, it's perfect though. It's going to win. Let me take it. Took it. Lost. All right. Now I'm down -400. So I'm like, all right, yeah, I shouldn't took that. Ooh, look, it's running up. Ooh, now it's going to go. Let me take it. Lost. Now I'm down 500. Remember, if I follow the plan, I'm only down 300 and I'm having I make $700 on the week. Okay. Guess what? Man, that thing looks great. I got another trade. Now at this point, I'm not really seeing setups. I'm seeing candles going in the direction that I thought the market was going to go. I'm not seeing setups. I'm seeing big candles going in the direction that I thought the market was going to go, and I want to be right. So guess what I do? On that next one, I double up. Yeah, this one going to win for sure. Double up. Guess what? That one loses. Okay. So at this point, I've turned $1,000 week. Well, I've turned a $700 week into 6, 5, 3. I'm only up 300. Guess what? I'm like, well, I'm only up 300 now. Might as well keep going. I can come back. I know price action. I can come back, take another trade up, lose that one too. Hey, I'm only up 200 now. Well, guess what? Hey, I'm only up 200 now. I done gave back the week. Oh look, it's finally buddy EMA. Man, this thing is finally finna do. I don't know why it took so long. Let me double up. Loser. Boom. Now guess what? I've taken a $700 profit week and erased it. Not in one day. In like an hour, right? So everything that I built up from Sunday to Friday is now gone, right? You would think I would stop at that point, right? You would think that I would just say, hey, man, you just gave back a whole week. Let's call it a day. Nope. Because here's the thing. Once you start losing, you gain the confidence of Superman, don't you? I don't know why. You scared when you up, right? But once you're losing, fear. What is fear, right? What is fear? You don't know what fear is when you're down. Isn't that ironic, right? So hey, I done blew the whole week. Why stop now, right? Why stop now? I kept going. I tell you guys this story to tell you this. I blew the account out, okay? I went from having a $700 week to actually blowing the whole account out because I didn't follow the trading plan, all right? Now, when you do something like this, it's stupid. I don't know what else to say but to call myself stupid, right? When you do something like that, that's just stupid. But that's the trap of trading, right? That's That's the reward for not having discipline. That's the reward for not following your trading plan. That's the reward for not learning how to lose. Okay. Yeah, I have been on a 5-6 day winning streak. All streaks come to an end. You know what I'm saying? So understand that you're not going to win every day. Understand that you have to learn how to lose too. Okay. Trading is a P&L game. P&L. P&L. Profits and losses. You're going to have to put some stuff in the loss column sometimes. Okay. Just understand that. But if you know price action, if you follow a trading plan, you'll be writing in the profit side a lot more than you write in the loss side. So just take that story right there to heart, because I already know I ain't alone. You know what I'm saying? That's why I ain't ashamed to tell y'all about it. Because I already know that's happened to a lot of y'all, right? If you're watching this video on money management, it's because you've probably done this too. Overtrading. As I said at the beginning, okay, many of you are that close to becoming profitable traders if you just stop overtrading. Especially those of you who know price action, those of you who can read a price chart, those of you who know how to take second entries with trend. You take 4 second entries with trend, more than likely you're gonna make money. All right. So what's the problem? Why aren't you making money? You're probably over trading, or you're risking too much, or quite possibly risking too little, which can lead to over trading. All right. So that is my spiel today. I hope this really helped the person who asked for this video on money management. Take that story to heart, follow your trading plan. Okay. So to wrap this up, know thyself. Find the balance you need for your risk tolerance and for your account size. Get a trading plan. Follow your trading plan and take high probability price action setups. And the odds are in your favor that you will become profitable. All right. So this is a great time to like, share, and subscribe. Hit that subscribe button if you enjoyed this one. I greatly appreciate it. I will put my personal trading plan in the description of this video. If you would like to use it or make adjustments to it, feel free. All right. And for staying this long, we will do a work study lesson so you can see a second entry in action today. All right. So let's get to that work study lesson. Roll it. Hey guys, how's it going? JD here. So in this work study lesson, we're going to take just a quick look at Euro Swiss. I've had a lot of people in the comments ask me about second entries and how they work. And second entries take practice. Okay. It takes practice to, first of all, learn them. No, I shouldn't say that. First of all, you need to have a good education. You need to be taught what a second entry, how a second entry works, how it comes about. And you really can't just learn that in a YouTube video. You gotta get some education, right? But I'm gonna try to help you out. So that's first. But after you understand the concept of a second entry, then you just have to practice it. It's a trade that you have to practice to be able to see it correctly. But on this Euro Swift, we had a decent one. It's not perfect, but it's decent. And I'm gonna show it to you. And so first, you have to understand that the market moves in twos. Okay. I've said that in plenty of videos. Let me explain to you. When you see a beautiful run up like this, I don't want to use that. I want to use a bar or something. When you get a beautiful run up like this, I mean, that's a trend. Okay. That is basically a mini trend. Look at the EMA right here. We were moving sideways, right? Clear sideways. And then you get this explosion above the EMA, stayed above the EMA. And you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You got 10 green bars in a row. You cleared everything here. This is pretty much, some people consider this a breakout, right? We were in a range. It broke out. You don't know what I mean by that? Hey, let's do some teaching. I got some time. I need a horizontal line. Ain't got no horizontal line? Okay, I'll just have to wing it. This is, look at this. See that? See that line right there? Boom. That's the top. I'll just make the bottom here. To the best of my ability. With this, okay, boom. That's a range, people. You see it? Coming off the bottom, coming off the top, coming off the bottom, coming off the top. That's a range. Then you get this breakout here. Strong breakout. That is a leg. Okay. This is one leg. So when you're talking second entries, you start at the top, which is here. And we understand that the 21 EMA acts as a magnet. Okay. So when you're this far away, it's going to pull back. And that's exactly what we wanted to do. We wanted to pull back. We wait for this pullback. So then the market moves in twos, by the way. Just throw that out there. But we got this high, then bam, it pulled back, right? You know what? Let me make that another color. We'll make that the correction leg. What color we want to make the correction leg? We'll just go blue. Okay, so then we get this leg back right here. Trend up, trend break. Also, all right. Then we pushed up again here. You actually could count this right here as a second entry on a smaller scale, and it works just like a second entry, and the higher low worked right here. You know, when you take a second entry off the EMA, it kind of works right here. But here's the thing, and this one would have worked. Like if you took this right here, this second entry, this is the second entry because this candle broke higher. But here's what I don't like about this. The market moves in twos, so you're always looking for two legs back to the EMA. This one just made, boom, one leg back. So really, the next leg back is here. Boom. Now we got two legs back, okay? Even though, hey, if you took this second entry, you would have won. If you took this higher low, you would have won. Well, not in 5 minutes, not this one. You would have won the second entry. 1, 2, 3, 4, 5. You would have won the second entry. Let's just talk second entries. You would have won this second entry. But I don't like this one as well because I only had one leg back, okay? But when you get the second leg back here, now this baby market cycle is over. Trend down, trend break, retest new low. The baby correction market cycle is over because all this stuff is connected. The market cycle, the rule of two, second entries, they're all connected. And many times your second entry is going to be the center of your pattern. So the center of the pattern in this case is the trend down, trend break, retest. The correction is the center. This is the trend. Okay, we're in an uptrend. The two legs back is a correction pattern, which I call the center of the pattern, which forms from the top, push up first entry, push up. This right here on this candle right here is the second entry long. Oh, my color's all off now. This candle right here is the second entry long, and look at it go. So let's get this here. So right here, boom, look at that. Look at that. And now notice something. The market has, the rule of two has played out. Leg up, two legs back, second continuation leg, and it was longer than this one, which is what we normally expect it to be. The same distance or longer. Sometimes it comes up short, but in a perfect price action like this was right here, you'll get this leg would be the same distance, and this one overshot it. The other thing that helped us on this is that I already had the sweet spot drawn up here, so I knew where we were headed. You know what I mean? So you take this one, bam. You also get what comes after the second entry, a higher low. So this one even had even more confirmation. Once this candle here, even if you don't take the second entry, once this candle here broke higher and closed above the EMA, oh yeah, it's go time. Because now you're looking, you already see the two legs back. You see that you got a leg like here. You're expecting another leg. Boom. There you go. So this is what I was talking about in the lesson today. If you take high probability trades like this, if you take 4 of these, you understand what I'm saying? This is why learning price action is so important. If you take 4 of these every day, there's a much higher chance that you're going to go 3 out of 4 rather than 1 out of 4. The odds are in your favor because you understand the market cycle, the rule of 2, second entries, higher lows, which all equate to good, solid, high probability price action trading. I can't make this stuff up. All right. So that is the work study lesson for today. Second entries are your best friend. Learn them. I hope this helps you understand them a little bit better. But at the end of the day, you're going to need some real teaching on it. That's just the way it is. You can try to just watch YouTube videos all you want, but I suggest investing in your education and truly learning how to count legs, how to see the market, how to read a price chart is the true skill that I'm using. All right. So that'll wrap it up for today. I greatly appreciate you guys. Please hit that like and subscribe button. Remember the trading plan will be in the description, and I'll catch you on the next one. My name is JD, and as always, I wish you increase on the sudden. Bye-bye. Thanks for watching all the way to the end. If you want to learn more price action trading, check out this video right here. My name is JD, and as always, I wish you increase on the sudden. Bye-bye.